Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Well, we can actually flip these Fibonacci retracements. We can kind of flip them upside down. And what they do is they give us a projection level. So, and I'll give you a specific example here. If we were to take, so I'm going to take the top of this retracement that I had originally applied. We've already identified our potential resistance area there at 145.50. I'm going to apply it to the top of that retracement. What that does is, at this point, we're going to ignore the retracement levels that we've been worried about, and they're all crunched up together. They're so tight anyway. It is a good example of where we wouldn't be paying very close attention to them. Now, all of a sudden, because we kind of flipped this upside down, we're very interested in these two levels. Because what these do, these are the extension levels, so they're the projection levels. And essentially what it's measuring is it's saying, well, okay, if you measure the prior retracement, so this little bounce in the market that occurred from middle of December to middle of January, 161% of that distance is right here, and 261% of that distance is right here. These are also derived from the Fibonacci number series, which exhibits itself in the natural world, and the underlying premise behind Fibonacci analysis as a technician is that those same patterns tend to repeat themselves in the market. So we use that to identify a potential target level. So if we'd identified this point here on the 13th of January, well, as a potential entry level or entry point for a bearish position, then we'd flip this Fibonacci analysis upside down, and we'd be looking at these projection levels as where we think the market might go. And it gives us a good idea. So for example, the first layer, and you can see we got a little consolidation at that 140. So we were up here at 145, and by the time we really identified an opportunity, maybe it's 143.50, and we're projecting 140. Is that enough distance to give us an opportunity? You know, if we're going long, you know, so if we're trading a debit spread or just a long put or something like that, we got to worry a little bit about time value, and you know, does it give us enough distance to be worth the risk of buying that option or trading that option, or is it something that maybe we should pass on because the projection is just not far enough? Like, let me give you another for instance here. We're going to look at the pound. So I got a quick question I want to answer real fast about those fan lines. Those are not Gann fan lines. Gann fans and Fibonacci fans are actually different, but they're very similar in function. So they're not entirely dissimilar, but they're not the same. So in this case, I'm using Fibonacci fan lines. Okay, so here I'm looking at the pound, and the symbol for this particular index option is easy to remember, GBP. So Great British Pound. And once again, you can see the same kind of trend that's fairly uniform across the Forex right now, that lately there's been a lot of dollar strength as traders have been moving into the dollar. And we can do the same kind of analysis where we had let me just identify it. We had a little bounce that interrupted the trend here in the very end of December, early part of January. So we had this dollar strengthening going on from the middle of November through the end of December. And all of a sudden, the market it bounces up a little bit. There's a little retracement, kind of cuts about halfway through the prior trend. Pretty common. That's not unusual at all. In fact, it lined up pretty accurately with a Fibonacci retracement level we were watching at the time. And then the market starts to go back down again. Well, we would do the same thing that we did just now on the euro. We basically flip that retracement upside down, and we measure the bounce. We measure the interruption in the trend. So I've applied a Fibonacci retracement from the bottom to the top that interrupted the trend there at the end of December, middle part of January. And sure enough, we're basically meeting that initial price objective of 161.8. Now in this case, the market had a bit further to fall. So we had about 8 points or so to fall to the downside by the time we would have identified the bounce. So there we might have a more interesting opportunity had we been analyzing that trade at that time. So it's a really easy analysis, not overly complicated. I'm one of those guys that I tend to opt for simplicity over arguing about minutia in both technicals and fundamentals. A lot of it is just estimates, I'm sure everybody knows this. A lot of it is just estimates. You kind of estimate the best you can, and where the Fibonacci tool really comes out to shine is it helps you develop that estimate. So let's see, let me shift gears here a little bit because I promised we get to a case study, and I have one. So we had talked about just a minute ago about the YUK, the yen. And we looked at the trend that occurred from the end of November through the beginning of January, and where those had identified a potential entry opportunity that's actually kind of a current one. So I thought this would be a good illustration. This is not a recommendation, by the way, because obviously so much of this depends on your risk tolerance, your own trading desires. So it's not a recommendation, and I'm not. Your own personal situation is it would be too complicated for me to try to address it. So, but I think this will help to make it a little bit more realistic. As to how would we approach this right now? So if we assume, so let's clean up this chart just a little bit. I'm gonna get rid of some of this stuff. And we're going to say, all right, so we've identified a bounce off of a nice resistance area at about 92. And at this point, we're trying to figure out, all right, where do we think that's likely to go? And because we got a bounce, and the prior trend segment was here and to the downside. So we're going to project something to the downside. We can apply a retracement to that bounce. So where did it go? And we get a projection here at 161.8. Now, obviously, we're doing this analysis in real time, so the market hasn't gotten here. This is essentially how we would make our estimate. So where do we think prices might go? Well, in this case, I might suggest that they'll get all the way down to 86.4, or that's the potential in the short term. So if we were thinking about this from an options perspective, and we'd start to decide, well, all right. If we're bearish and we think that there's the potential here for, this is like 4 points to the downside, so we got some distance that the market could fall. We could design a trade to take advantage of that.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.